Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
What do you think is happening right now with gold, silver, and the miners?
Gold, silver, and the miners, they've been correcting for a little while. We've seen a kind of a sideways pullback move in gold the last 2 months, really. We've seen kind of gold trade sideways in a range. Silver and miners are a little more volatile. They've more or less pulled back and had a nice healthy correction. But everything's fallen right down to critical support zones. And depending on the type of analysis you use, if you use simple technical analysis, gold, silver, and miners, they've all pulled back to a support zone. Using Elliott wave theory for gold, it's pulled back into a nice support zone, and it looks as though it's starting a wave 3 of wave 3. So we've got a very potential big rally here, I think, in gold, silver, and miners, and we're really kind of kick-starting at the last couple sessions. Today we're seeing gold miners up 5%, and that's a play that we've done in the last day here, is get into gold miners for this potential big rally, at least to test the recent highs of gold, if not to explode and continue to march on up to around the $1460 level for gold. And of course, silver will be much higher. Miners will continue. So I think we're on the verge here of a very significant run. In the last 2 weeks, we've seen the sentiment in precious metals become very, very bearish. We've seen short-term support levels be broken, very short-term ones, and it was enough to make everyone start to panic and start to think that gold and silver miners are breaking down. And really, in the grand scheme of things, all the markets have done is a signature correction in the market, and it does exactly that. It scares out the short-term holders who don't fully grasp how the market moves. And so all those people, we saw them start to panic in the last week and a half, 2 weeks, and now the market is reversing, and I think we've got potential for a very significant rally in precious metals looking forward the next month.
Well, miners should be profitable even if they drop a bit because they've become much more efficient.
Oh, for sure. Yeah, they are. But the way it works is gold miners they're like a highly leveraged play on gold or silver. So if gold moves up 1%, we typically see the miners move up, 2, 4, 6%. They move up a lot more. They're like a high beta play on gold and silver. So they always do move a lot more. And all they do is it's just you see waves of kind of buying and waves of selling in the miners. So everything is over-exaggerated. It's kind of like, panic, greed buying. Everybody jumps in. They don't want to miss the next big 50% move up in gold mining stocks. And then as soon as they start to roll over, they panic and they think it's going to tumble, 90% like we've seen in the last bear market. So it's over-exaggerated in miners. Silver's the similar, but not quite as extreme. And then gold is the more stable, kind of more of a long-term asset class that it just doesn't have that quite the same volatility as the miners, the speculative type plays.
Are China and Russia still buying gold like crazy?
Yeah, gold is slowly, I'm not exactly sure what China's doing at the moment, but I know gold is slowly being accumulated by the masses and by the banks, and it's kind of like the only real physical asset they're trying to hold against all the debt they have. But in the grand scheme of things, I don't see gold really being sold off in any big way. We might have the occasional big bank or big firm dumping some shares, but usually if it's just one big kind of dump, it's just somebody rebalancing, changing their whole strategy or their outlook. In the grand scheme of things, I think the global kind of economy and global investors are slowly accumulating, buying gold. They have no intentions of selling it anytime soon. It's a long-term investment. It's a little store of value, an insurance plan in case their currency, their country goes into some type of default or loses a lot of value. Gold can pick up some of that slack. So gold is kind of just a real, in my opinion, gold is a pretty boring investment. It doesn't pay dividends. All it is something you buy, physical asset. You hope people drive the price up and give it more value over time, and it'll kind of hedge against falling currencies. So to me, gold is just that. It's kind of a boring, long-term play. You don't need tons of it. You just need some of it to counter losses in other areas if currencies start to collapse more.
Should you insist on holding your own gold physically instead of just a certificate?
Yeah, I'm very I'm all about holding it physically, not in my possession, but holding it at third-party storage outside of a bank. I think it's great to have a store of both gold and silver stored in some type of safety vault system service somewhere, because you never know what's going to happen. And banks, they can put a cap on how much you can draw. They could lock you out. They could close down. You might not be able to get to your safety deposit box if you've got something in a bank. You're not even supposed to keep it in there. They don't want you keeping, money in large sums of money in your safety deposit box or precious metals in many cases. So, you're really kind of taking a risk, if you ask me. If you're in the mindset that you think you may need gold or you want to have some for protection, then you really don't want to have it with the bank, and you should. Most people don't. It's not the safest play, because if we need money because currencies or countries are defaulting and banks are going under, you don't want to have your money with those banks. You're just putting all your insurance plan in a capsule within something that's collapsing. So you want to keep it out of the banking system, stored third party.
Silver, some people are saying it's still due for a bigger move than gold.
I think so. I think silver could be very explosive in terms of where it's headed. We could see, I think, $100 silver very easily. And you look at the price charts on silver, in the last couple trading sessions, we're really starting to see silver ramp up. It's formed a major breakout back in, you could argue, June, early July. It broke out of a major basing pattern. So now we've got a series of higher highs, higher lows. We've got a huge bull flag that just formed, and I think washed all the weak hands. The people got scared out of silver over the last 2 weeks. I think they've all been flushed out, and I think we're on the run, and we could see $24 an ounce in silver very quickly. We were at about $18.50 or so last week, and here we are, I think, on the potential to go up to about $24 an ounce. So pretty good run, $6 an ounce move in potentially only a couple weeks here in silver. And still, this is just the beginning for silver and gold and miners. They are just breaking out of basing patterns, and we could see a multi-year run from these levels going forward, especially if we see serious issues in the financial markets take place.
If you hold gold and silver right now and there's a dip in the market, would you still recommend a hold? Yeah,
I think holding gold and silver. I trade both. I've got long-term positions in gold and silver and miners that I've accumulated back more or less in 2015, and now we're kind of swing trading gold and using more leveraged ETFs. For example, we traded the GDX, and also depending on the type of play, you could do Nugget, which is 3 times leverage, and it's up 15% today. It was just a quick swing trade that got in the morning and closed out already today. It was, you can get these huge moves. So we've already got our core position in precious metals. Now it's about playing the volatility and the swings that happen in that market. And if you've got a really strong setup like what we've had in the last couple of days, you can jump into these 3 times ETFs and catch huge percentage gains really quickly, get in, get out, and just ride that momentum. So that's what we plan to do going forward, is let our long-term plays mature and now actively swing trade some of these explosive setups that take place.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, some of my analysts have said they think the U.S. dollar has kind of peaked out and other currencies are going to pick up. Any view on that?
Yeah, the U.S. dollar index is trading in a massive pattern. Now the question is it a giant bull flag, which means this is the halfway mark that we've seen since 2014. We saw the dollar bottom. It rallied, and it topped out in January, the first quarter of 2015. Since then, it's been flagging or trading sideways. So the question is this a flag, a bull flag, meaning we could see another massive, 6-month rally from this point higher and see the U.S. dollar just gain incredible strength? Or is this a topping pattern and it's on the verge of breaking below this sideways channel and breaking down in a huge way and losing a ton of value? And we're not going to know, obviously, until it picks a direction and starts to run. At this point, it looks weak. It's testing. It's kind of, in a way, depending on your time frame, if you're looking at a weekly, monthly, or daily chart, it is more negative than anything. It looks as though it could break down and start to lose substantial value pretty much through September. So we could see it drop and make new multi-year low on the U.S. dollar index, which in turn will send commodities much higher. More specifically, gold, silver, and mining stocks should rally and go the opposite direction. So I'm kind of waiting, looking at the chart patterns, very close to wanting to take a short position on the U.S. dollar to profit as it falls. But at this point, we're already long precious metals, and to me, they're almost the same play. You either get long precious metals or you go short the dollar at this point. So there's no point. I don't see any point in just doing both positions. I'd rather take the precious metal side of things. It's got a little more price action, a little more percentage-wise gain than the U.S. dollar index.
Crude oil. People, again, are kind of on the cusp with that. Will it make another major drop with seasonality, or will it be maintained if countries like Russia freeze their production levels?
Yeah, it's tough to say because crude oil is going to be trading in a fairly large range here. More specifically, the last 2 trading sessions we've seen for crude oil futures, we've seen crude oil post some pretty substantial rallies, both early in the past 24 hours and last Friday. We saw the U.S. Crude oil rally up fairly significant, up into the mid $46 per barrel, but they both days it sold right back down into the lower $44. So a pretty big swing, pretty much a 5% swing each day that we saw crude oil rally up, and then big selling stepped in and crushed it and pushed it all the way back down. And when you have 2 long, I call them candle wicks to the upside, I call them tweezers. And usually that's a reversal sign. It just goes to every time price goes up there's huge selling pressure and it's unloading shares. And on the daily chart, if you see these tweezers, it usually means we're going to see 2 or 3 down bars after that, meaning this week, tomorrow, the next day, we will probably see weak crude oil prices as it kind of continues this downward momentum and sells down a bit. Overall, I really don't have a real clear insight on where crude oil is going in the near term. It's very mixed signals. It's trading right in the middle of one of its ranges, so it's 50-50 where it's going to go. But the short-term charts show that we probably got downward bias for the next day or 2 simply because of these candlestick patterns.
Enbridge is buying Spectra Energy for $37 billion, creating North America's, or one of North America's largest pipeline networks. Does that bode well for crude?
To be honest, I'm not sure. I don't follow that too much, but I did see a video, kind of somewhat to change the subject here. I had a friend send me a video from Elon Musk's company, the Solar City, I think it was. The video shows the future of what he wants to do, and he took the map of the United States, and he's got three fields of solar systems they could put up. And on the grand scheme of things, they are very small plots of land, three of them over in the Texas area, that if he could put all the solar systems right there, there'd be enough to power all of the United States on solar power. And it's a real eye-opening video. And that's just solar, and that doesn't include other people working on the whole wind energy. So, crude oil could slowly start to lose a ton of its kind of strength and value over time, because cars are starting to pick up speed to be electric. Everyone's starting to get the electric scooters for getting around town. It's just a matter of time before crude oil really starts to feel the pinch. It's just, I don't really think crude oil is feeling the pinch on the whole automotive side yet, but I think we're 2 or 3 years away where it's really going to hit the market, electric cars, electric vehicles, and I think it's going to definitely hurt crude oil. Crude oil may struggle to get up into huge valuations again, simply because this whole Clean Energy Act that's kind of coming into play, and the goals that some of these massive players like Elon Musk have their goals, their eyes set on reaching.
Of course, I just saw an article that says Elon Musk's own personal fortune could be at stake here because he put $3 billion into Solar City. He's worth about $8.5 billion. And of course, if his SpaceX stuff goes sideways, they had an explosion last week. Perhaps Elon's vision of the future could be curtailed simply because he's run out of money.
Yeah, it's potential. I saw that video where the rocket exploded, and it was interesting because you saw Tesla shares right after that tumble. Obviously, he's part of Tesla. So there's fear just across the board that any of his investors were kind of in a somewhat panic. I think he's going to succeed. What he's already done and created, PayPal and Tesla and the whole rocket, all that stuff in Solar City. Like, this guy, I think, is unstoppable, and I think he can find investors if need be. But I think he's very smart individual, and he'll pull through. And things he's changing the world. And I don't think an explosion here and running a little short of cash is he's dealing with billions, obviously huge money, but there's also big money out there looking for quality investments once they get to a certain point where it's pretty much almost a guaranteed success. It just needs the capital to finish moving forward. So I think he's going to succeed in whatever he wants to do. He's already proved his way, and there's always going to be hiccups along the way, whether it's something that doesn't work or something explodes or burns to the ground. Those are just hiccups, and you can't have success without running into that. So I think he'll be just fine doing what he's doing.
Plus, if solar really starts to take off, it'll use a lot of silver, won't it?
Yeah, it'll use a ton of silver. It'll be great for the whole precious metals of silver industry, because there's quite a bit used in solar panels, and as they become more efficient and these bigger, these big type of fields that want to get generated or produced, it's going to be a massive amount of supply needed.
Chris, anything else you wanted to mention today?
The only thing that I've noticed specifically today in the market is that the stock market's holding up, but it's lost a lot of its upward momentum over the last month and a half. It's kind of just grinding its way higher. And today we're seeing money, even though stocks are trading higher today, we're seeing money move into the safe havens. We're seeing bonds up sharply, up over 1%. The precious metals are up sharply, and we're seeing money flow back into utility stocks, which you can follow on the XLU sector ETF. And I talked about this with subscribers a day or two ago that had fallen right down into a critical support level, and it looks as though money is about to start flowing back into the safe havens, the risk-off assets, and everything seems to be turning. I think we've seen things turn. I think we're going to see money flow for the next several weeks into utility stocks, into precious metals, in bonds. We're going to see them continue to firm up. And then the stock market, I think, is pretty much done with its upward momentum, and it's going to start to slide. And as it slides, it's going to help fuel these safe haven plays even more. And I think I think this is probably a pretty significant week in the market for volatility starting to pick up, and for all these key assets to change direction and start another leg. Safe havens higher, equities lower.
Chris, thanks a lot for chatting with us.
Always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, his website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter on Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.